Good morning, traders. Gates W. Adams here. I am your host, and welcome to another episode of the Trader Bacon Show. So I just want to start things off by saying that we seem to be having a little bit of technical difficulty with my guest. We're going to try to get him in, Rich, here in just a few minutes. But if not, I figured I'd have an opportunity to share some of my trading and some of the activity that has been going on today, some of the stuff that I can even bring in from last week as well. Before we jump into everything, first and foremost, want to congratulate last week's winners. And let me pull this up again. We have Bhavin, Jan, and Laura. Hopefully I pronounced all of those correctly. But congratulations, those three had an opportunity to win free evaluation from Apex Trader Funding. So congratulations on that. We will be giving away 3 more evaluations based on today's show. So make sure that you get that form filled out. That should be up here in just a moment. And I wanted to take one other quick moment and remind you guys that if you are looking for an evaluation, we have until basically end of day tomorrow, April 2nd. We have 80% off any evaluations and 1 day to pass. So if you are a trader that goes for those bigger moves, you can actually pass your evaluation with 1 day, and you can also get it at 80% off. So take full advantage of that if that fits your trading styles. And then I wanted to also mention, we like to kind of keep that running tally of the amount of money that's been paid out to traders. At the end of the day, the most important thing when it comes to being a trader funding company or prop firm is how much money is actually going out to traders. They have now, Apex Trader Funding has now broken $130 million paid out to traders and almost $50 million just in the last 90 days. So folks, as time goes by, you can see this trend increasing. They are paying out more and more and more each month, each quarter, and each year. So get your hands on a piece of that by getting your evaluations, by getting those passed, and taking full advantage of the opportunities that are here for you guys. So anyway, all of that said, we're going to cross our fingers and hope we have our guest in play for today. If not, you guys get me again. Hopefully that works for you guys on today's Trader Bacon Show.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
All right. Well, good morning. It looks like you guys get the Gates Show again today. So thank you for joining me. And Steve, thank you for the good morning there. Happy April. It is April Fool's Day. So I'm not going to necessarily call it appropriate that it's a Gates Adams only day, but we'll go ahead and run with it nonetheless. Do appreciate you guys hanging out with us and talking trading. So anyway, as I've mentioned on previous shows, I'm still very aggressively going through my journey. And one of the things that I've been doing over the course of this year, actually just probably the last 6 weeks or so, I decided that I was going to scrap everything that I had been doing and really go back to just really some of the fundamentals, some of the basics of really reading the charts and understanding the markets from a much, much better angle than I had been in the past. And really that stemmed from, I learned a trading strategy that worked really, really well. And when I was keeping with my mechanics, when I was maintaining my, my mindset, I guess, if you will, I would typically run at about an 80-ish% win ratio, really got up to about 82%. The problem and the thing that I struggled with the most was that my risk reward ratio was completely off kilter. And when I say this, I would basically be going for a 9-tick scalp on NQ with a 21-tick stop loss. So you had to have a pretty high win rate in order to in order to be successful. What I'm talking about, Jay, is this is actually the Apex Investing Sniper System. Daryl and I have known one another for a very long time. And so he actually was my original trading coach and teacher. And so I basically went through everything and learned that system. Now, I struggled with it over the years. I would do really, really well, and then I would have a couple of losses, and then I would kind of well, I would abandon the system in hopes of trying to regain some of the losses that I had gained. So this chart actually has nothing to do with that particular trading strategy. But what I realized was that I was not mimicking, I was basically just following through on a simple, chart pattern recognition strategy. So I didn't have enough knowledge of the markets to really have confidence in my plays. So there was no filter for me. If I saw an entry, I took it, win or lose. And like I said, when I was successful, when I was really on point, it did really well for me. I simply didn't have, the discipline to stick with it after I'd had a couple of losses. And I've talked about this on the show. Last November, I had, I guess, what would have been my most recent kind of meltdown with it. I had 2 down days in a row. And based on the way that I had my targets set up, it would have taken 5 or 6 days of winning in a row just to recover from those losses. So of course, I tried to recover quicker and it went bad and I lost all of my accounts. I will get into VIX here in just a second, Steve, and show you kind of what I'm looking at and how I've been relearning the fundamentals and the process here so as to better my my results. So basically what we're looking at here. So one of the things that I did is I hired a new trading coach, not to basically take anything away from what I had learned before, but to fill in some of those gaps. So really all I've been doing for the last few weeks has been trading. I've just been basically trading supply and demand and gaps. And so I've been doing pretty well. In fact, let me see if I can pull up. I've been trading MNQ. So let me pull up my Trade-Evate account. This is actually 1 of 10, but let me show you where I'm sitting right now. Is I'm at 51,596.24. So I'm up almost $1,600 on the $3,000 target. This is an evaluation for the record. And so that's really kind of where I've been focusing my attention. Now, this is not going to be a permanent trading strategy. What this is designed to do is to gain confidence in each specific factor that I'm ultimately going to bring into my trading. Now, I don't know what all of those factors are going to be. I just started with supply and demand. I'm learning a ton, and it's been really, really helpful for me in doing that. So, so this is actually the trading chart, and you can see here that it didn't exactly stick to my plan. So let's take a look at my NQ, because this is where I do all my charting. And what I was seeing was I saw, of course, we had this huge gap this morning. Like everybody knows about the gap that happened this morning. And in pre-market, we kind of just teetered around this arena here and fell back down into actually what is a fair value gap from Wednesday, I believe, if I've mapped that out correctly, right? So I had expected to see some movement into that fair value gap, and I actually on Tuesday had a trade set up that would have been successful. However, in my still trying to get through that disciplined state, I ended up kind of cratering. I'm going to be fully upfront and on this is that I basically reversed my position because I kept seeing the movement and I just moved too soon. My original position would have been very successful for me. I ended up going in the hole about $1,200, and then I ended up making about 1,000 of it back. So I was down about $200 on the day last Tuesday. Now I hadn't traded since. I'd been traveling, and so today was my first day back into the charts. And so I had a little bit of that moment again as I'm trying to work through my confidence levels by utilizing and getting more comfortable with these strategies as I learn them. So this morning, basically, now this is the opening bar. We're on a 15-minute bar right here. So this was the opening bar, which again left this huge fair value gap right here. Now we're going up into significant supply levels up here. So my expectation was as we got into one after another, was that we were going to have a turnaround. Now, I ended up initially taking a trade right here. I don't remember where the exact number was. Anyway, I can pull that up, but I'm not going to kill screen time with that. So I ended up getting in right about here, and I saw some hesitation here, and obviously it started to move back up. And I was thinking that as we broke this level basically coincides with this supply level right here. And so my thinking was, my flawed thinking clearly, was that if we pushed past that, really we had nothing going until we hit this, what used to be, let me pull this up on a daily. So this channel basically had been forming all year long, and we broke out of it on March 15th, so a couple of weeks ago. And it sort of obviously has started to become more of a resistance level than a support level. So the thinking being that if it broke that level, we were going to head straight back up to that as a resistance level. So anyway, I reversed my position. I'm sorry, I didn't reverse my position. I got out of my short position and was waiting for it to break the high, at which point my intention was to go long. Well, it didn't do that. And as it came back around, it clearly started to move down again. So I ended up getting in, again, I lost my position. So I got in probably somewhere here around 567 or so. So I lost a tremendous amount of position there, but managed to find my way through and withstand some of the almosts up here and took it all the way down. So I ended up holding onto that position. I ended up about $300 on the day, and or about 270 on the day, and did salvage a small loss this morning, and basically what I lost on Tuesday. Zunaid, thanks for hanging out with me today. What's up, buddy?
What's going on, man? I'm just enjoying you talking through charts.
I am talking through some charts, man. The last time you and I talked through some charts, I was missing a few pieces of the puzzle, man. So we're kind of getting back to it, and I'm throwing out some redemption here. How's everything going with you, man?
It's good, man. I can't complain. I mean, I'm glad you're kind of talking about the charts. I actually took a couple of trades with my funded account, and I'll be honest, it's so easy just mentally to be like, oh, it's a funded account, so I'm going to risk more. But it's like if you just think long term, right? So I think I've been funded like. Let me see. What am I on? I'm on my 12th funded one. I'm looking at the account right now, and it's like all the other 11 ones, I guess you can say, have been just blown simply because, although it's nice to have that mentality of, oh, okay, I'm using someone else's money, so I can be a little more patient with it, whatever else. You also are just kind of messing around a little bit too much, right? Like the analogy that I like to use, or I guess the math that I like to break down, is you're spending about $200 to get a funded account. The process there is you're spending about $40 for the eval. You pass the eval, you spend about $100 or whatever on the monthly or the lifetime. I always do the lifetime. So it's like $160. So it's like $200, and I get the drawdown of $2,500. So in my head, I'm like, we'll take some swings here. You know what I mean? But I'm trying to just be like, you know what? No, let's just be patient. Let's kind of take it singles at a time, if you will. So that's like the toughest battle for me at the moment.
You know what? And I think that that's a pretty common challenge that people see. I mean, here's the thing. The reality is, we talk about the opportunity, because to basically make the same sort of trading structure, let's just talk about the stop loss. So if we're looking at a $50,000 account, you're looking at a $2,500 stop loss. In order to have that opportunity, you're looking at putting up $2,500 of money. So it's not that $200 isn't a lot of money. I mean, it adds up, especially when you've done it 12 times, right?
Yeah.
But we don't see it that way. And so part of the process is really just internalizing the fact that no matter how much you paid for it, there's money involved. There's money attached to it. Now, in the evaluation, of course, it's not going to be quite as much, but the second you get into a funded account, you are dealing with real gains and real losses. So they may not be money out of pocket, but the opportunity cost is there. So if you're up $2,000 or $3,000 on the account, you're about ready for a possible payout, and you let some of that go, that is money that could have been in your pocket that is no longer available to you. And I think that's where that mindset shift has to start taking place.
Yeah, no, for sure. I completely agree. And I can go over some charts. I know you had a guess. So if you want, you can chop it up with me. You can go try to contact a guest. It's totally up to you how you want to play it.
You know what? I think that at this point we're pretty much
Maybe
toast.
next
Let's
week.
go ahead. Let's go ahead
right.
and take a look at
So
what you got for us.
So here's what I've got, right? So this is,
Okay, perfect.
again, this is a funded account here. And you can see it right there, right? And today we made $984, but you can see I'm still shy of 50,000, which means, hey, I was down about $1,000 on this eval account, or excuse me, on this funded account. So here's what I'm kind of taking a look at. And I'll show some trades that I took as well, but this is a 65-minute, right? So call it about an hour and some change chart. Now you got some trend lines here. So you've got, one touch right here. You've got the second touch here. And then we just had, a bit of a third and fourth, if you want to call it that. But then we go ahead and break out, right? And let me do this. Let me do that. I'll show some trades that I'm taking here as well. But something, so that's kind of like the long-term picture in terms of zooming out, right?
Right.
Then you can see here at about 8 o'clock in the morning, we break it, we come back, and that same trend line ends up being resistance. Then the market opens and we fly all the way up. Then we come back and that same trend line here ends up acting as support right over there. So let me actually, here, I'll go ahead and see if I can enable some of the trades that I took. I know there's a bunch, so I'll go to the minute chart here. And this is me in there. There's still a bunch. There's nothing I can do about that. But this is just me kind of trying to get little bits and pieces, right? So if I go to the 5-minute, and I'm going to remove all my cells because then it just becomes too noisy, but I'll hopefully be able to explain my thought process as to why I took some of these trades. So this is a 5-minute chart here. We break VWAP. That's what the yellow line is. We come back. We go right back up. Now we know that, hey, this area here is holding on as support. So then you've got that right there. And then now when we come right back up, I'm thinking, okay, we've got this area that was supposed to be support. It broke. Now we're testing it, and I've got VWAP. So I got into the trade here, had my stop loss of about 20 points or so, and then I went ahead and closed out right when we were about to get to this trend line because I'm assuming that trend line is going to hold up as support, which it did for a little bit, right? And then I went ahead and took long again. So I went long here for about maybe 10 points, took it, got out, and then you have it come back up. Test it. Now look how close I was. So I wanted to go short right here. This is an actual order that I have out. I wanted to go short at 18,512. And I think this tick is about 2 points short, of filling. But the principle is there in the sense of, hey, this trend line acted as support. Now I believe it's going to be resistance again, the same way that it was at 8:45 in the morning. And then you go ahead and come all the way back down. Someone asked why the 65-minute chart. I think it was the math behind how if you go to just a 60-minute, right, the market isn't over. The market doesn't go from 9 o'clock to 4 o'clock. It goes from 9:30 to 4 o'clock. So the 65-minute helps with that, or else you'd get some pre-market action in there, and it just wouldn't be accurate for what the normal session looks like. That's why I use a 65-minute chart. But so that's kind of the trade I had out. Unfortunately, we missed it. Obviously, we didn't get filled, so I go ahead and cancel that. But the thesis was correct, where that trend line would have been resistance, and then we flushed, and now we've gone from green to red to the downside. So that's kind of the play that I had today. And, it really is tough. Like I've been telling the chat, that I would love to have funded accounts where they're just kind of copied. And I think I've had a max of like 400 or 500 accounts, but it's just a bad habit of like, we'll swing for some home runs. And then unfortunately, you try to do that, then you get hit to the downside, and then it just doesn't work out. So I think if folks have like a long-term vision, the long-term view of, hey, I'm not trying to retire today, tomorrow, whatever. I'm trying to trade for a couple of hours, and that's it, right? If I win or lose, that's it. I think that's something I'm going to need to do where it's like, hey, I take 2 trades max. If I lose both of them, I'm out. Each trade I risk $200, and whatever happens from there.
Well, and that makes a good point. And I guess this starts to bring up the point that I was making, where I'm really just focusing on supply and demand and some basic charting, some gaps and things like this, some gap fills and things like that, which I know that long term this isn't going to be a fantastic strategy in and of itself. But by gaining the confidence in this, I can start to see that supply and demand. I can start to see that support turn into resistance. So for me, like if I saw that, I hadn't actually seen it in the same way that you did, but I did see that move down coming in. And so whether you get that trade or not, it starts to build the long-term mindset of, I know what I'm doing. I'm seeing the pieces of the puzzle fall into place.
Yeah.
And by doing that, I can take all of the pieces that I'm learning now and continuing to learn, put them together with a hell of a lot more confidence. And to me, that makes all the difference in the world. That's one of the things that was really lacking for me last year, as I was really struggling through understanding the why behind a lot of the trades that I was taking.
Yeah, no question about that. One thing that I am glad Apex doesn't do, unless they do it, and you have to tell me, is how, for me at least, if I want to get multiple evals to pass, I have to click through each and every single process at the same time, right? Just like if you want 20 evals, you have to go through the same process 20 times. Whereas if you're shopping for an item, you can hit quantity 20 and it just does it. I am so glad that that's not the case, because I would just be like, oh, fail this one, 20. Oh, fail this one, just failed it. But then it's also, I'm gonna have to hit up camera and be like, hey man, listen, I've got this money idea. I don't know about legalities, I don't know about compliance or whatever, but here's something that you need to do. The reason I say that is because I feel like it'd be, you'd get more eval accounts. Have you ever copy traded? That's something I haven't tried yet.
I copy trade now, so I actually have that running on 10.
I didn't know you had 2 funded accounts. Oh, you got how many?
I got 10, baby.
Shut up. Oh, okay. So talk to me. So how long have you had 10?
So I started these back up. What was the date? Let me pull up.
That's awesome.
Let me see if I can. And what's really funny was when the first day trading was right at the roll date.
Yeah.
There we go. Let me pull this one out. All right. And we'll take a look. We'll take a look at my results here, because why not? You want to pop my screen back up here?
Yes, sir. It's all you.
All right. So let's go back to, here we go. All right. So here's my 10. Yeah. Right. So you can see they're all at 51.1, except for one is at like 51 almost 6.
Yeah.
So my first day, I set up my copier, and I'm trading on Tradeovate, but I'm copying on NinjaTrader. So I've got 2 machines running simultaneously.
Okay.
And it was the first time I had set it up this way.
Yeah.
And so I was trading on TradingView. I was trading the March contract of MNQ. Yeah. And I was set to copy the June contract. So Tradeovate had already rolled over automatically. NinjaTrader had already rolled over automatically. Tradeovate hadn't. So I wasn't set to trade I wasn't set to copy the right instrument.
Yeah.
And it ended up being about a $600 play. Now there's been some slippage throughout the course of the last 3 weeks.
Yeah.
But I missed that nice starting point on my account. Yeah. But let's take a look here. Let's take a look at this guy, and let's see where we are.
Nice. So dude, this is awesome. So how long did it take you to pass each eval? Did you copy each eval as well?
Well, no, these are evals.
Oh, so you're I'm
pushing.
Got it. Okay. Okay. So you're about $2,000 shy of passing all of them. That's awesome.
Right. 1,500 on one, and then let's see here. Let's just do a custom range. Let's just bring in today.
How much is a copier?
I want to say it's $100, maybe 200. It's like 97 or 197.
That's pretty cheap. Is that like monthly or?
No, it's a one time.
Oh, hell no. Wait, so okay.
Don't quote me on that.
I mean, but it's
investing.com. It's on there.
But it's somewhere in there. Okay, got it.
I'm thinking it might be $997 now that I'm saying this. So don't quote me on that. Yeah, so my first day was March 12th. And that was my $604.50 win. Yeah. So you can see I've been having some ups and downs, but overall the cumulative has stayed positive. And today brought me to basically my new high.
That's awesome.
So across the board. So it's been a labor of love. I've been spending a lot of time. I've been watching a lot of videos, as we all do, and really focusing in. And like I said, I hired a trading coach who's just really basically railing me on the fundamentals so that I have a better understanding and really just building that confidence. And it's really funny because all of that confidence that I've been working towards, last week I blew, because if I just left it, I would have done well. This morning, if I had just left it instead of getting out of that initial trade, I would have. I think I would have been up about 450-ish or so on 3 micros.
Dang. Okay.
So I'm starting to pick up now. Again, long term, I would rather go for a 5-point, 10-point move on a bigger lot or whatever the case may be.
Yeah.
But right now, I've got these huge ranges that I'm dealing with, so I'm pretty accurate with it.
Yeah.
And you can see I'm actually making some positive moves with it, but they're very anxiety driven. I'm used to being in a trade for less than 30 seconds. 9 ticks on NQ is zero time at all.
Yeah.
And so I've been in the trade as long as 4.5 hours.
Yeah.
In fact,
Okay.
let me see here. That to me, 3 hours. 3 hours and 44 minutes was my longest trade. So there was a lot of anxiety for me in that. I didn't get anything else done for the day. I would, the way I'm set up, I could work while I'm in a trade, but I couldn't work for 4 hours while I'm sitting there watching this thing do its thing. It ended up being a winning trade. It was solid. I was happy, but it kind of wrecked my day. And so that's still some of the work that I've got to put in to make sure that what I'm doing is operating. Now, one thing that you'll see here, and I talked about my initial risk reward ratio when I started trading was 9 ticks to 21 risk. Well, right now I'm sitting on 43% win streak, but I'm up, $1,700 less fees.
Yeah.
So I've adjusted my risk reward to where I can actually not have to be super precise, 75, 80% or better, and still be profitable. That to me was a huge factor as I started making this transition, because the other way I know doesn't work for me. Psychologically speaking, I'm not disciplined enough to fight that fight.
Yeah, no, I struggle with the similar things that I mentioned earlier and what you're saying about as well. By the way, chat, went ahead and dropped the link. If you were using Apex, you want to go ahead and use a trade copier, go ahead and feel free to do so. I believe right now they've got 80% off. And I think it's still 1 day pass. So if you go ahead and get your
off and 1 day to pass until tomorrow. 1 day to pass closes at 4:59, but 80% off is I think 11:59 Eastern time.
All right, perfect. So go ahead and check that out. I think what I'm going to try to do is chart strictly on the 4 hour and 65 minute, and then when I get around wicks or trend lines, then I can go ahead and just get down to the 1 minute or the 5 minute and say, all right, cool. Here's what I'm going to go ahead and do. Here's what I'm going to trade. Because like my setup right now is kind of like this. And it looks like you've got your guest back here for a couple of minutes. Because I've got my laptop here. And so whenever I'm doing meetings, and then I've got here, I don't know if you can see it properly, but it's like my another monitor here. I'm just like keeping an eye on the stocks and the charts and things like that. So, going back to what you were saying, like sometimes you're doing other work, right? We have other responsibilities, but we want to make some money on the side with trading as well. So we do that. I'll tell you what, man, I'm going to go and hop off. Looks like you've got your guests here. If they're good to go, give me a thumbs up. We'll talk to them for a couple of minutes, and then we can hop off the show.
Awesome.
Trade for pay. Give me a thumbs up if you're ready to go, and I can bring you on. Perfect.
Rich, what's up, buddy?
Hey, how you doing? Oh boy, this was a bad morning. I could not pick up the camera or the microphone if my life depended on it.
Well, I'll tell you what, if you're available, Rich, I'd love to bring you back on next week. You came in 28 minutes into a 30-minute show, and we're not going to get much of a chance to chat. So are you down for next week?
Yeah, I'm good. Better late than never.
Right.
But yeah, no, I'm good. It's just that I have no clue why this just wasn't picking up.
Well, we got you in, so we know we can get it done. So maybe we'll shoot for stepping in a little earlier next week and making sure that everything's running properly. But man, I was excited to have you on the show, so I'm glad that you're available next week, so we don't try to cram, some content into like a minute and a half. But I'm glad to see that you got in. That tells me that we can get it done and we can push for next week. What's the point of having so many accounts? All right, so let me put it this way. The first time I melted down was when I went from one mini contract to two, and what I was trading, obviously smaller scale. And psychologically, I completely melted down. For me, now this is not necessarily the answer for everybody, but for me, if I'm looking at one account and watching the movement on that account, if I've got 9 more accounts going on behind me, I don't have that psychological challenge that I have when I scale up my contracts. So I'm basically, tricking myself for whatever that's worth, getting that extra value. So, I'm up, $1,100 per account. So that's $11,000 up. Now, of course, these are evaluations. That's not money in the bank. But when I move to that funded account level, with the same effort and with the same same sizing, I can multiply those results. Now, I'm in a position where I'm comfortable. If I blow them all, it's not going to devastate me. I'm not, this is not how I'm making my living trading yet, obviously. But for me, it just helps psychologically speaking. So anyway, I hope that helps. And Rich, let's catch up next week. For the rest of you guys out there, make sure you filled in the form and get your chance to win. We'll be announcing this week's winners on next week's show when we have Rich back on and ready to roll early. So Rich, you and I will connect afterwards and make sure that we get that.
Just one thing before I go. Did you see what happened this morning or last night at Open? What we were talking about, that big gap up with all that news on Good Friday?
I did, and then it dropped back down. It gapped straight back up again, and I traded that gap back down this morning. I chickened out a little bit, but I got back in and actually ended up taking almost a $300 profit today. So
yeah, that was a good gap fill. That was really good.
It was, man. So we'll talk more about this next week. I appreciate you guys. Have a wonderful rest of your week. Don't be April Fools out there. Go out there and be careful and be cautious. And I'll see you guys next week on the Trader Bacon Show.
Welcome to the Trader Bacon Show.